Hey guys, welcome back to the channel. Some of my stocks that I own have done incredibly well since the bottom of the market in late March, including iRobot, up 143% since the bottom, Canadian Solar, up 210%, Toll Brothers, up 240%, and my best ever stock, Tesla, who's up 473% from the bottom of the market. There was a very long time period, from February to August, where I did not open any positions in new stocks. However, on August 27th, I decided to buy a brand new stock, SmileDirectClub, ticker symbol SDC. This video will hopefully give you all a clear understanding of what this company does, some of the key things to consider if you're thinking of investing in them, and I'll lay out my full thesis on this stock, which makes me believe that this stock should double its value in the next 5 years and could potentially 7x by 2025. Please make sure you stick around to the end of the video because you will not want to miss out on this stock. As an investor, it's important to continue to research new stocks in addition to staying on top of your current holdings. Without new holdings every once in a while, you will lose the ability to have an adaptable and flexible portfolio. In the same way that you need to be willing to sell shares in a company when fundamentals or valuation change dramatically, you must also be monitoring stocks that you do not own, so when the fundamentals or valuations make it a good investment, you're willing and ready to take advantage of that. Before we jump into SmileDirectClub Stock, please make sure you like the video because it really helps the channel, and subscribe for more content relating to growth stocks like SmileDirectClub, in addition to detailed videos about how I'm growing my dividend-focused investment account. I'll be putting together a video reviewing your portfolios, so if you're interested, drop your M1 Finance portfolio links in the comments below. And if you've not signed up for M1 Finance yet, use the link in the video description below, and when you fund your account within the first 30 days, you'll get $10, and the channel's dividend portfolio will also get $10 added to it. With all that said, let's talk about SmileDirectClub. To start this off, I'll play you a video of one of their commercials so we can get a good idea of what their main product is.
It began with a simple idea that everybody deserves a smile they love. That's why at SmileDirectClub, we started sending clear aligners directly to doorsteps for up to 60% less to give everybody easy, affordable access to a straighter smile. And what started as a simple idea has evolved into something bigger, a movement with more than 500,000 satisfied grinners and counting. How'd that happen? Well, we invented smile shops and at-home impression kits, so starting your smile journey is easier than ever. But what really makes it possible is what you don't see. Our extensive dedicated team of smile experts hard at work on your new grin. Your custom aligners are created at our state-of-the-art 3D printing facility, the largest one in the US. And throughout your smile journey, one of our duly licensed doctors checks in with you remotely from the world's first teledentistry platform. All that to deliver this little, clear thing that supplies a lifetime of confidence. So join the club and get a smile you'll love for $85 a month with $250 down. It really is that simple at SmileDirectClub.com.
SmileDirect's key value propositions are their ability to connect customers to orthodontic or dental professionals and their ability to manage the whole operation, from customer acquisition through the end of their treatment plan. They will either send the customers a self-administered fitting kit or have little stations where they get impressions of your teeth and they send that to their network of orthodontists who then develop a treatment plan. Finally, they also get customers from dental offices who then recommend their patients to SmileDirectClub's treatment plans. Once the plan is in place, SmileDirect manufactures and sends each aligner along the treatment plan until the whole plan is finished. They IPO'd in September 2019 at $23 per share. But since that time, they've fallen all the way down to under $4 per share, and at the time of this video, they're all the way back up to $12 per share. So this stock has been shown to be very volatile, which for long-term investors like me, presents a lot of opportunity if you buy in at a valuation that makes sense. SmileDirect was founded in 2014, and since then has grown at a breakneck speed in terms of total revenue. In 2017, they had revenues of $146 million. The next year in 2018, they just about tripled their sales to $423 million. And in 2019, they grew another 77% to $750 million. In the current year, analysts expect revenues to decline to $631 million due to the pandemic, the economic uncertainty, and the closure of many of their distribution outlets. Their business relies on expendable income, and although they are cheaper than most of their other competitors, if people need to choose to make their rent payments or eat over getting straighter teeth, I think most people would choose to pay the necessary expenses. However, revenue growth is expected to resume in 2021, with an analyst average revenue prediction of almost $900 million. And I think, personally, it could be higher than this, possibly over $1 billion. Later in the video, I'm going to go over some of their growth initiatives and their total opportunity, which will drastically impact their revenue growth over the next 5 to 10 years, so make sure you stick around until I talk about those. SmileDirect has never posted a profit since its IPO in Q3 2019. However, I think that the company has a great future ahead of them in terms of profitability. In Q2, they showed what their long-term cost structure may look like, and from what I can tell, it's fairly possible. Historically, they've had gross margins between 70 and 75%, and they expect this to increase to 85%. General and administrative costs have fluctuated between 20 and 40% since their IPO, and SDC expects this to average out to 15% in the long run, which seems kind of like a stretch to me, and I think 20% is more likely. However, the biggest expected change is in their sales and marketing expense, which they expect to reduce from about 75% to 40 to 45% in the long term, primarily by expanding their current infrastructure and by getting referrals, which cost the company nothing in advertising. I expect to see some profitable quarters within the next year, and for this profitability to be sustained and grown after that. Compared to many companies that I've looked at, SmileDirectClub has a solid balance sheet. It's not like Apple, Facebook, or Microsoft, where they have enough cash on hand to buy a small country while carrying next to no debt. But SDC's balance sheet is good. As of June 30th, 2020, they had a cash balance of almost $400 million, which is almost enough to completely pay off all the debt that they have. They also have a current ratio well over 3, which is great. For some context, a current ratio under 1 is usually considered poor, while a ratio of 1 to 1.5 is okay, 1.5 to 2 is considered good, so a current ratio of 3 is very good. I think that the balance sheet of a company is one of the most important factors to look at when trying to determine the risk level of an investment, and the balance sheet of SmileDirectClub gives me some comfort that if things don't go as planned, they still has some strength to fall back on while they figure out some of their operational problems. There's one thing that investors in SmileDirectClub need to be aware of before investing in the company, and that's their history of poor press coverage. Earlier this year in February, NBC published an investigative report that essentially made the case that these aligner products are not safe for people, which raised concerns about SmileDirect's product quality. Here's a quick clip of the report.
This is an aligner.
The ads promise to straighten your teeth
For up to 60% less than braces.
in 6 months on average for under $2,000.
We didn't have to make any appointments.
Get a scan in the store or a kit through the mail. Do the rest from home.
It seemed like a really simple, easy way that they were offering people to straighten their teeth.
Anna Rosemond ordered a kit and took an impression of her teeth.
They would have you take the 2 different putties and mix them all together and then put it in your mouth.
A few weeks later, she received dental aligners and followed the instructions to send in photos of her mouth every 90 days. SmileDirectClub told her the treatment would be reviewed remotely by one of its 250 dentists and orthodontists.
So this was all done online?
Yes.
After a year, Anna was in pain, and she says she tried but couldn't speak to her assigned dentist. So she found an orthodontist who diagnosed her with a crossbite, possibly caused by the aligners, straining her neck and jaw muscles, sparking migraines.
Now, I watched the full report, and I'll link it in the description for you guys if you want to watch it for yourselves, which you should. But none of the questions that NBC raised really concerns me as a potential investor. In response to this, SmileDirect sued NBC for $2.85 billion when they were asked to take down the report and chose not to. As an investor, I do not prefer to invest in products that are bad or inferior, because over a long time period, I think that this leads to business failure. So when SDC showed some of their customer satisfaction statistics with shareholders, I paid close attention. When compared to other direct-to-consumer competitors and traditional dental sales office providers, SmileDirect had 97% positive reviews, while the others had 95% and 87%. They also have earned a 4.8 out of 5 Google customer rating, which is tied for the highest amongst its peers. So in order to invest in this company, people should be aware of their past scrutinies, but I think that the concerns about their product quality are not valid. Now, if I had to choose a single reason why I'm investing in SmileDirectClub, it'd be their growth opportunities. At the end of 2019, they projected an annual growth rate between 10 and 20% in North America, which I think 10% is a little harsh. But 15 to 20 sounds about right in my mind. But the real growth is going to come from international sales. They currently sell in Australia, the United Kingdom, New Zealand, Ireland, and Hong Kong, which they expect those markets to grow 20 to 30% every single year. However, those are the only international markets that they're in at the 2019. And they expect to get an additional $100 million in sales from new countries every single year, because they have a total addressable market of about 500 million people. So in total, the company expects to grow on average between 20 and 30% every single year moving into the future. So, to do some rough calculations on the current value of SmileDirectClub, I have quickly made a spreadsheet. Let's assume that SDC grows revenues 20% every year until 2025. Which is at the low end of the company's projections of 20 to 30% annually. And let's say they achieve gross profit margins of 80%, which is below their projections of 85%, in order to be extremely conservative with this value calculation. Marketing and sales expense of 50%, which is above their range of 40 to 45%, and then general and administrative expense of 20%, which is above their targets of 15%. When I plug all these figures in, with an expected PE of 40, which is reasonable in my opinion for a company that's still growing at 20% and has a total addressable market of 50 million users worldwide, and when I discount this back at 8% per year, I get an intrinsic value per share of 15%, which is 34% higher than where it's currently trading at. However, that value is calculated when using assumptions well below the projections given by the company. But when we use the projections that the company gives us, the 2026 expected share price is $81 per share, or over 7 times the price that they're trading at right now. So as a potential investor, even when using conservative estimates, the stock should double in the next 5 years. But if the company's projections are correct, their stock price could 7x over the next 5 years. That's the real reason why I decided to buy in this company, and why I will continue to buy into it for the near future. Even if things don't pan out the way the company projects them to, I'm still buying the company 34% below what they should be valued at. But if the company hits those projections that they gave, I could 7x my money over the next 5 years. If you guys liked the video, please like and subscribe for more content like this. As always, please do your own research into these stocks before you buy in. Sign up for N1 Finance with the link in the description to earn $10 and to help the channel. And I will see you guys in the next video.